Welcome to the Bleaves Crypto Show. My name is Bleaves. We're here to talk about this crazy crypto world and everything that's going on. Over the weekend, the market went out of its mind, dumping completely catastrophic. And by the way, there were a lot of people, including a guy named Dr. Profit Crypto, who I doubted. And I said there's absolutely no chance that this thing is going to 75,000. Well, guess what? He was right and I was wrong. And that pisses me off. Make sure you hit the like button on the way in. We're going to talk about why this guy was right and why I was wrong, what's going on in the market. I'm going to tell you exactly what happened over the weekend, why we had all of this catastrophic sort of dumping, and what happens next. It's not financial advice, but I'm always right.
It's your boy Bleaves. Everybody listen up. Let's get it. I'm trying to put money in your pocket, that crypto wallet, that bing bada bing ching ching big profit. Even when the market's sideways, I'm looking for ways to get paid. I'm checking my coins around breakfast, then again around bedtime. Bet this, it's not financial advice, but I'm always right. 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 I'm always right.
Nobody hates being wrong more than I do. I value and I try for everything that I do to make sure that you guys are the most informed group of people in cryptocurrency. And every day I come to you with my opinions, my thoughts, and sometimes I just get it wrong. And most of the time, I'm actually right. But when I'm not, I don't like how wrong I end up being sometimes. Sometimes I do this based on emotion. And sometimes I feel really good about something and it just doesn't do what I think it should be doing. It doesn't resonate. I don't get that. I get the feeling that the market wants to go up. But that's my thinking. That's me thinking that there are not ghouls and goblins, which I've called them over and over again, that are trying to wreck the market for their own nefarious sort of gains. And is it naive of me to think that? I don't think so, but what else could there be? So we're going to talk about everything that's going on. We're going to break down exactly what happened over the weekend as the market ended up shedding hundreds and hundreds of billions of dollars, and there's actually a blueprint here. I'm going to even take you through the anatomy of why these things break down so that you have a better understanding. So if you would help me, hit the like button on the way in, make sure you subscribe to the channel if you haven't already, and let's break this all down. Now, the first piece that I'm going to give you is I'm doing this with AI. So what I did is I had Grok, the #1 AI in the world, break down exactly what happened, and I'm going to give it to you so that you can see exactly what it is and what happened overall. So my question originally was, analyze the crypto dip this weekend and track it back to where it started, and can we confirm any major holders that are selling large amounts? Is it somehow tied to Wintermute or Jane Street again? Spoiler alert, it's not Jane Street. In fact, Jane Street was not even named in this, and there was no evidence that Jane Street was involved. But the cryptocurrency market experienced a sharp downturn over the weekend of January 31st to February 1st. Bitcoin dropped all the way down to, this doesn't give you the whole number, but it dropped down to 74,766 on most exchanges. The event triggered a historic liquidation with 2.2 billion to 2.5 billion in leverage positions wiped out in 24 hours. Now, to give you guys clarity about this, the problem with this market, the biggest problem in cryptocurrency and any market, is leveraged positions. That is the problem, okay? Because all you're doing is gambling. Remember, the reason that retail has kind of fled cryptocurrency right now, part of that is Polymarket and Kalshi and Coinbase adding prediction markets. These prediction markets are taking the risk out of digital assets and putting it into just betting yes or no on something, and then you get compensated immediately, and it's a lot easier for these guys to make a buck from one person to the other by just going yes or no and moving on. So it simplified the process. By the way, my head is too big over here. Ah, damn. Woo! I try not to be ugly, guys, but I can't help it. So anyway, so it's been, they get an immediate reward, an immediate result, an immediate stimulus, and that's why they've moved on, right? So not only do we have this, but this right here, this is important. Thin weekend liquidity amplified the move and turning the midweek pullback into a full-on rout. Now, the timeline for this was January 28 to 29, the Federal Reserve held interest rates instead of cutting them. Then Kevin Warsh was nominated as the next chair, which, of course, he is a fairly hawkish guy, ultimately, that he is not one of those guys. He believes in the strength of the dollar, okay? Now, he is also somebody who's calling for massive rate cuts right now, and he is a Bitcoin proponent, but he is a hawkish former Fed governor. So Bitcoin initially dropped on that news. I told you guys it was going to drop, but that we would see a little bit of a reversal, and then we saw a reversal, but the reversal could not sustain itself because coinciding with that, we had a stock sell-off for tech stocks, Microsoft, and then 650 million in crypto liquidations. Broader markets, including precious metals, which are now down 20% and 31% began bleeding into crypto. I'm going to show you gold and silver. They collapsed over the weekend. And remember, trading is 24/5 on those assets. So we didn't see anything on Saturday and Sunday, but when we got here Monday, futures dumped catastrophically on gold and silver. Now, I have not, to be fair, looked to see whether or not we got any of that or clawed any of that back. But the crypto total market cap now is 2.6 trillion, which means that we have dipped dramatically. And the rock means dramatically. Whew, been crazy. Also, on January 30th, Bitcoin fell to 81,000 amid 1.68 billion in liquidations and 818 million in spot ETF outflows. This was mostly Bitcoin, like 700 and something million. Political uncertainty intensified with a brief U.S. government shutdown after Congress failed to pass funding. Now, going back to January 30th, Congress had a partial government shutdown. The partial government shutdown meant that most services are still up, and Democrats have said they're voting no. But the Senate passed the CR. So the Senate's already done their part. Today, they're not going to be voting on the continuing resolution to fund the government. Tomorrow, they're going to be voting on it. All Democrats are expected to vote no, but all Republicans are expected to vote yes. All Republicans voting yes will pass this continuing resolution. Now, there is a clause in it that's a problem, and that's in 2 weeks. They have 2 weeks to negotiate what they're going to do with DHS, the Department of Homeland Security. I saw a thing on this weekend. Now, of course, we know what happened. 2 people were murdered in the streets of Minnesota, but Kristi Noem said that over 70% of the people who have been captured as part of ICE's deployment, and by the way, look, you don't have to like ICE, but ICE is doing what the law says they should be doing. You cannot like the Trump administration. You can say, I think there should be amnesty. You can have a great opinion about it and a benevolent sort of opinion about it. But until somebody creates a law or something like that, ICE is supposed to enforce the law. Are they overzealous? Obviously, they're murdering people in the streets. But that's still their job is still to remove people. So Kristi Noem says 70% of the people that have been arrested are criminals that have either been convicted of a crime in the United States or in their own country. Now, that is not illegal immigration. That is criminals, okay? Now, then, Face the Nation is where she made this statement. However, they pulled up the documentation from the Department of Homeland Security, and it was 47%. So Kristi Noem's just kind of making up numbers to make it sound better than it is. But at the same point, Face the Nation thought they had a gotcha moment when they said 47% instead of 70%. And I would say to that, so what? 47% of the criminals are now off the street. And again, guys, you should know, I am not a big-time Trump supporter. I'm not MAGA. I don't believe in most of their fight, okay? I don't believe that trickle-down economics work because it doesn't. It's never worked in history. It still doesn't work. It's never going to work. But they do have principles that they operate by. Some I don't believe, but again, tariffs. I believe in tariffs. I think tariffs are actually a great idea. There's a lot of things that will resonate, okay? And I do think that ICE should be getting rid of people who are not here legally. The end. It's not complicated. To me, it's not complicated. And I still don't like Donald Trump, okay? But who cares? Who cares? He's the president. We owe him support. So, nonetheless, this creates scaredness. This creates problems for people. So let's keep moving on. January 31st to February 1st, geopolitical tensions peak with an explosion at Iran's Bandar Abbas port and the U.S. Iran. I said Iran. Oh my God, Iran. Escalations, freezing risk appetite. So that's what happened over the weekend. Iran had an explosion at one of their ports, then thin liquidity. Remember this. This is where it gets interesting. So the amount of selling that happened was not nearly as much as it was in October. However, in October, the crypto market was way up here. So there was plenty of liquidity to go around. Listen, let's just take into account the dip that we've had from 4.27 trillion market cap to where we ended up just a little while ago. And when you go down here and you look at that, that's 41%. Crypto has dipped 41% in overall market cap just in the last 4 months. That is catastrophic. Okay? Will it come back is now the case. And remember, the one thing that I've been talking to you about this entire time was this line right here, this white line right there, which represents the support, the bounce, everything. That's it right there. Now, when you look at it from this context and you look at the overall market and everything, we've been maintaining for a long time this uptrend. Now, we are officially in a sideways trend, I want to say, and I'm going to show you why in just a few moments. But ultimately, we broke down the structure of where we were. Now, is that bearish? Is that bullish? I think it's bearish, but let's also take a moment and recognize that sometimes crypto goes into a parabolic run. So, for example, this right here, if you just kind of look here, we had a trend line that was forming right there. Then we got this bullish breakout. Then we got this break over here. It broke down deeper, but we still had a higher low, right? So we still have right here a much higher low than we had before. So I'm going to say that, when we get these kind of moves right here, they look pretty bullish ultimately. But then when they break down right here, we have to figure out, are we going back up or are we now in that bear market? Well, if you thought that was the case right here, then you were wrong, because then we went to a new all-time high. Now the question is, are we going to do that again? And it looks like to me that we're going to do that again. However, I'm going to show you something in a few minutes when we get back to the charts that's going to make you be like, oh shit, like that's not looking good. That's not looking great at all. Let's get into chat and see what's going on. What is going on, everybody? I hope you're having a good morning. There is a lot to talk about in this market. We're up $50 billion right now, and Jesus Christ, I can't get my head together. Like, guys, here's what's happening. My camera is a Logitech Brio 4K. If anybody, by the way, if any of you guys are rich out there and want to send me a really nice 4K camera, let me know. I'll give you my address. You know what I mean? This is supposed to be a 4K camera, but it's I hate the goddamn thing. You know what I mean? So anyway, let's keep going. So everybody, boy, there's a lot of comments so far this morning. All right, guys, I'm not going to be able to keep up with this one. So I'm going to say thank you guys for coming. Thank you for showing up. It is so important, so imperative. Make sure you hit that like button if you're here. Make sure you share this with everybody that you know. Let's get some more people in here talking about it. Let's get back into what is going on here. So we had that uptrend. It broke down, but then we went to a much higher high. And then look at this. If you look at this trend line, if you just take an honest look at it, you'll see what I'm talking about. We had this nice trend line right here. Then we had it as resistance. Then it kicked back over to support for a short time. Then it came resistance again. Then it became support again. again? Like, once we establish these trend lines that we can obviously see, then we can make determinations on what the market's going to do, and we don't have to be completely wrong about it. Now, just because this broke down doesn't mean we're not going to break back up into that 3 trillion range. There are reasons to do that. 1 p.m. today, Eastern Standard Time, crypto is having a meeting at the White House, and there's going to be a lot of people involved that are going to be looking at the cryptocurrency market and what we can do to make it better. By the way, while we're having this conversation, it looks like AI cryptos are starting to have a rally and starting to break out. ICP is up pretty big. Tau is up pretty big. Link is up 5%. So maybe there's something to this. We might be seeing a little bit of a rally. The question right now is, will it sustain? I'm not sure that it's going to sustain. And while we're at that, let's take a quick look before we're going to talk charts in a little bit, but let's look at silver. Look at this, the collapse of silver. What did I tell you guys was going to happen? I told you a couple days ago that this is exactly what was going to happen, and it is playing out to perfection right now, right into this pocket right there. It went all the way down to $71, rallying just a little bit right now, but look at that. That's absolutely crazy. And then what happened to gold over here? Where did I tell you gold was going? 4,600. Where did gold end up going? And why did I say it was going to 4,600? Because there was a CME futures gap sitting right there in that range. And where did it go? It actually went down even further to 4,400, right to that level, the previous top of that previous market before any potential rally. So look, we can predict what's going on, and sometimes, like this, we're going to be 100% correct about where the market is headed or where it's going. So if you set a buy order based on some of these things, then you're going to be in a good position. And by the way, if you look at the pivot right here, boom to boom right there, look at that. It played out perfectly. We just saw this same chart and this same development. We just saw this on silver. So it's doing the same thing. So, but again, we'll break that down just in just a few more minutes, okay? Now back to Grok. So after that happened, there was Trump's tariff threats. But here's the thing. Again, thin liquidity, because depth is down 30% from October, which means that every time you sell, like if you sell 10,000 Bitcoin, it drops the price from 115,000 to 114,000. But when you've lost 40% of your market, that means that 40% of your liquidity has also escaped. So instead of selling 10,000 Bitcoin, it goes down 1,000 points, it goes down 1,400 points. It amplifies exactly what you're doing in the market. So if you're selling, it cuts deeper. So what's happening is they're selling not nearly as much, but the price is going down exponentially more because we have no liquidity in the market, and the calculation for Bitcoin is based on that liquidity. So then you have Trump's tariff threats, which added inflation fears, and by February 1st, Bitcoin had dumped and over 335,000 traders were liquidated. Okay, so now here's the major holders, and I'm not mad at Coinbase, despite the fact that you guys should know by this point, I am always mad at Coinbase for something, right? I'm not mad at Coinbase for this, okay? But they dumped a large Bitcoin holding over 10 hours on January 31st. 11,000 Bitcoin, which is $880 million at around $80,000. Now, why am I not mad? Well, here's the reason, okay? And by the way, I don't want them to sell. I want them to hold forever. I want them to hold and increase the value, because if you take 11,000 Bitcoin off of the supply, off of exchange, if you take that Bitcoin and you hold on to it, you're creating a supply crunch. So I don't like the fact that they're not doing the supply, they're not helping with the supply crunch. But here's the thing. On October 10, when Wintermute started dumping on the market, which they did, they're on the list here, and I don't like them. They're on the list. But Coinbase, they bought 11,000 Bitcoin when Wintermute was dumping everything and trying to just destroy and capitulate the market. Coinbase stepped in to try to save everything. Binance stepped in to try to save everything. This is why Binance is creating $1 billion from their Seifu fund, so that they buy some of this Bitcoin to show faith. They're going to, that 11,000 Bitcoin right there, they're going to buy that 11,000 Bitcoin over the next 30 days is the way that it's playing out. So over the next 30 days, you're going to have Binance stepping in and buying the Bitcoin that Coinbase is selling for that safe fund. Now, if Coinbase wants to be part of it, then they can create their own fund and they can do the same thing. But if they don't, oh well. So I'm not mad at them for selling 11,000 Bitcoin. They bought to save the market in October, but now they have to sell back. And by the way, let's call it for what it is. Let's go back to Bitcoin. Where was Bitcoin on October 10? Okay, when they started buying at 100,000. They lost hundreds of millions of dollars. Let me say it again so you can hear me. They lost hundreds of millions of dollars in buying Bitcoin to try to stabilize your price action. You could suspect that they bought somewhere in this range right here, in the $100,000 Bitcoin range, and they didn't sell until right here. Coinbase lost their ass on this. Okay, that's what happened. Coinbase lost their ass. They were trying to protect the market. The market broke back down. Like I was saying over here, and I left this up because I don't want to, but I said this is the most likely next move if it doesn't break down. Now I said if it doesn't break down, if it does, it was going down to this level. It went exactly to where I said, but I didn't expect it to go there. Okay, just because I told you guys on Thursday and Friday that that's what could happen doesn't mean I expected it to happen. So I'm not taking a victory lap for that because I said it's not going to happen. All right. But if it does break down, this is where it's going. And look, you can't predict this shit much more accurately than this. But again, I'm trying. By the way, some of that for me is me hedging for you guys because I always try to look. I want to be right. I want to be right every time. I want to protect you guys on everything that you do. So I'm doing my best to try to figure out exactly what's going to happen next in this market. And sometimes because I'm a moon boy, sometimes I want the market to start running. So I start telling you that I think it's going to run, and it just doesn't. It just breaks down. So anyway. To kind of break this out a little bit more, we're right here and we're right here, and that means that we're sideways over the last April to February of 2026. So in about a year, we've had a huge peak, but now we're back to where we were in April of 2025. Now, that doesn't mean that we're done. It doesn't mean that there's not going to be a rally. It just means that we got a generational dip. In just a moment, I'm going to explain it to you, and you're going to see it on the chart. Now, moving back on, Wintermute sold during low liquidity hours, moved Bitcoin to exchanges. See, these are the bad people. Bitcoin was sold by Wintermute during low liquidity hours. Why would they sell during low liquidity hours? You want to know? Because they're trying to force the price down. They sold 34 to 3,700, approximately $270 to $300 million. Multiple X analysis coordinated with thin markets leads to 1.6 billion liquidations. And then BlackRock had 528 million in outflows. Again, BlackRock doesn't buy and sell crypto for themselves. They are an ETF, so they buy it based on what you, the investor, are doing with BlackRock. So, you know what I mean? Persistent net selling for over a month, capitulating amid downside. These are people who are getting scared. Glassnode data, over 200,000 traders were liquidated. And then you have specific liquidated whales. You've got Hyperunit, you've got Hyperunit whale linked to Garrett Gin closed their ETH long position, and another Bitcoin whale got liquidated. There were hundreds of millions of dollars. Mega whales were net buyers. So the big guys are buying a whole bunch, right? Accumulating lightly since November, but absorbing supply from small sellers. MicroStrategy continued to buy 264 million during the dip. This split highlights deleveraging. Over-leveraging longs got flush, but strategic large holders saw opportunity and they bought it up. Wintermute sold a bunch of crypto during, and by the way, here we go. On-chain data also showed them moving the Bitcoin, aligning with coordinated selling narratives. That's why these people are garbage. That's why they are worthless human beings, because they're doing it to try to screw you and me. All right. Jane Street, however, there was nothing on Jane Street. And Jane Street is the reason that we dump every 10 a.m. or 8 a.m. my time every single day, Monday through Friday. That's the Jane Street is one of the biggest market makers as well, and they do the selling. Okay, so now here, if geopolitical risks ease and liquidity returns, a bounce is possible, but analysts warn of further downside to 63 or 75,000 if selling persist. So now you guys are informed. You guys know exactly what happened over the weekend and what's going on. And the ETFs on Friday de-risked 509 million, which again, 528 million was IBIT, 300 million the day before. So we had a lot of outflow. We're at 55 billion. $55 billion in positive inflows on Bitcoin, which kind of explains why the price is so high. But we look at the Ethereum ETF. The Ethereum ETF was not good. It had 252 million coming out, so we're down to 12 billion again. Remember, we were at 16 billion not that long ago. Looking really good. And by the way, you talk about capitulation. Look at Ethereum right now. Ethereum's almost down to 8. It was down almost to 1,800 again. Woo! Could you imagine? Could you imagine being Eric Trump? Like, look, I got it wrong when I said we were going to 75,000. Eric Trump catastrophically got it wrong. He's got a much larger user base of people who need to get, all their money liquidated. Eric Trump was the worst analyst in crypto history. Jesus Christ. He is the Jim Cramer of actual crypto. Good Lord, he was wrong. Anyway, we had outflows of $11 million. And by the way, you can't be mad at me for saying that because it's Eric Trump. It's not Donald. We had 9 million, which is 16 million in inflows for XRP. People are still buying XRP. Got an XRP video coming out, by the way, at 1 p.m. today. As you guys might, I wanted to show, we're pivoting a lot in very short time right now. So we're producing some very, very different content. That top 5 at 5, we're going to stick with that. But we're also going to do every day. We're going to be covering some of these major cryptocurrencies on the channel. Pivoting away from meme coins a bit. Stuff that we've done. To me, like I told you guys before, I think the meme market is dead. I think we're absolutely cooked. Now, let's keep going. Extreme fear, we're at 14 on the Fear and Greed Index, the FAG, as they say. Fear and Greed Index is down pretty low. Liquidity, we're not even going to bother looking at. And now we're going to go into the market right here. We're up $60 billion on the day. Now, let me talk about the anatomy of a dump. I'm not going to have here's what I'm going to say. I'm going to try to make this as easy as I possibly can. And I'm going to try right here with a fresh chart. We're going to remove everything off of this fresh chart. And I just kind of want to break it down for you. Okay. So we're going to focus really on starting October 10. Okay. So on October 10, what you saw was right here. That right there is institutional manipulation. Okay. So we start off with institutional manipulation. That's how the market starts to dump. Okay. Now, we don't know that it's going to be this drastic. Okay. What we know is that this institution was propping up Bitcoin. By the way, let's not call them bad or good, but this institution is propping up the Bitcoin price. No matter how much Bitcoin they have, no matter how much it is, they are helping to prop up the market by hodling and not selling into the market. So now they've decided to sell into the market and take their profit. Maybe they've decided this is the top, that we've reached the top, and they accumulated way, way, way back over here. They're in enormous profit. It makes sense that they would do that. That's the anatomy of it. The first people to come for this are going to be the institution that just catastrophically does it. Then you have the next people that start to sell, which are the whales. The whales get in on the institutional manipulation because they also were already rich. Okay, this is where it comes in. They're already rich. They already bought down here at these low discount prices. So after those happen, then you get retail. That's you and me. So then we start selling over here because we're scared, okay? Once the dip is created, and that dip is this dip right here. Once that's created, then we have the buyers who start to step in. Now, who are the buyers? Really, we could just you know what? Let's just do this. We're going to delete that. really all we need to do is reverse this, because now what you have is you have who buys at the bottom? Institution. Then we're just reversing the process because that's the way that it goes, right? The whales are buying right here. And then retail is buying up here on this dip. So we've had this dip, and then guess what? Retail is buying at these higher levels, right? Because they're like, oh shit, we're getting this is getting bought back up. We're going back up. So what happens there? People are still scared. So retail gets flushed one more time. And who starts this off right here? Institutions, followed by whales, followed by retail, followed by institutions buying here, followed by whales buying right here, followed by retail buying right here. And then what ends up happening? They go back down again. Why? Because they're capitalizing on, in order for them to make money, they're getting the money. The money comes from retail. Every once in a while it comes from a whale. Every once in a while it comes from another institution. But that's how they're making their money. When they go in and they buy an asset, when the price goes up because other people are buying. When other people are buying, it creates demand. When demand goes up, price goes up. Once that's done, you FOMO, fear of missing out. And then what do? They sell on you, because that's what happens. And by the way, this is the anatomy of every single pump and dump in this market, okay? It doesn't matter. Let me just kind of zoom out here, and let's go to just like an old meme coin. Do we have like an old meme coin? Pablo. Pablo is the institution here. Or insider friends of Pablo are the institution here. So if you're in MK and you're looking for a pump on MK, the reason that's going to happen is it's going to start with institutional accumulation down here at the bottom of the range. Then it's going to go all the way up. And who's the seller? Institutions sell up here. Whales sell up here. Retail then sells down here, because retail bought on the way up. Institution bought right here. Whales bought right here. Retail bought right here. It plays out the same way every single time. Then what happens? Institutions start selling, whales start selling, then retail starts selling for a much smaller profit. Then the dip happens. Institution, which would be Pablo or whales, start to buy again, and then retail comes back in and says, oh yeah, we're going back, baby. And then it dumps even harder because the institution is making the money all over again. And by the way, it's the game. I'm not mad at Pablo. I'm not mad at whales. That's the game. And by the way, when I say institution, I'm really just saying like Pablo is a whale in that regard. So that's what's happening. As a market maker, and that's what Pablo ends up being, a market maker, because it is my belief that this right here was Pablo, that he just pumped this market for himself, because he's really trying to find new people, new investors to come in and buy his project. Nothing wrong with that. Look, nothing wrong with that. It's a meme coin. It's what it does. Okay. So where does that leave us? Let's go back over here. And now let's talk about what does the market look like? And let me show you the similarities of this market to the previous market. And again, I'm going to not use my normal chart. I'm going to use this chart instead. So we have a test pump. Then we have a double top with a bearish divergence. Then we have another top that kind of resonates in a certain spot. Then we have a full-on capitulation. Okay, so I'm just gonna draw a line. I'm gonna say this is this right here. This is this right here. This is this right here, and this is that right there. What does that tell you? If I'm right about it, what it tells me is that we've got a long way to go in a bear market. If in fact we are in a bear market. Now, I'm reticent to say that we are, But I also want to say this. If you were to zoom around, and we're going to go to weekly for this purpose, if you zoom out, you zoom around, the top of the previous market does matter. So here's the top of the previous market right there. Then here's the top of the previous market right there. Okay? So we get strong bounces. We get consolidation because people capitulate. But we get strong bounces from these ranges. All right? So we had this downward momentum. And, you know, it's hard when you're doing it this way to kind of look and get the gravity of it. But, you know, look, there's the top over there. We go down just below the top of the previous market, which was roughly 19,000. So we dip all the way down a little bit more because if you remember, this is when FTX collapsed. So we were already in this range right here. Like we were already at the top of the previous one right there. We didn't know that FTX was going to happen right there. So again, we dip, we get just this catastrophic sort of, oh my God moment. Then all of a sudden it starts to rally. Okay. So we're back to the top of the previous market. Well, guess what? Here we are at the top of the previous market right there and right there. This dip right here coordinates with this dip right here. This dip right here coordinates with this dip right here. Or maybe coordinates with this dip right here. But if we were to examine it a little bit further, then let's take our bars pattern, which I picked the wrong one. And I picked the wrong one. Given the opportunity to do it a couple times, how could I not do the wrong? Where did the fucking... All right, so if that's it, and that's it, then there we are. If that's it, and that's it, there we are right there. So if somebody's telling you that they think Bitcoin's going to 65,000, they're following the pattern because that's what the pattern tells you is that 65,000, that's where the dip is. So, and by the way, I don't like it, but it is playing out to perfection right now. So that's what I'm seeing in the market. That's what I'm seeing on Bitcoin. I don't want to see it. I want to turn on blinders and I want to be like, nah, that's not going to happen. Nah, see, that's not going to happen. But it's happening. So where does that leave us? Well, again, if we don't break back above and we don't have like a breakout, then we're going to go down. Investors are now tired, okay? The fight for Bitcoin right now, the bears are winning. They're winning catastrophically. I mean, catastrophically. This is just an absolute flush. So we're right back where we started in 2021, 2022. The question is, did we miss the bull market? Now, the other thing, by the way, let me go back here one more time. I want to show you the time frame of this because I did that the other day and I thought, well, shit, that's, we're going to go from pivot to pivot, okay? The pivot to pivot right here is right there to right there. That was 455 days, basically, all right? So the last bull market from the pivot to the pivot, 455 days. This one, 700 days. So remember when they said that the 4-year cycle is broken? There it is. 4-year cycle is broken. We're now in a 5-year cycle at least. Maybe not even that. Maybe we're going to see something crazy start to happen. I don't know. Zilliqua, by the way, just up 27% right now. Jupiter is up 12% right now. HBAR is up 7% right now. So we're seeing a little bit of activity in the market. ICP just broke out. I'm long on ICP, by the way. I did not get liquidated. I think, or I thought that I might get liquidated, but a strong relief bounce right here on ICP. Not sure if it's going to sustain, not sure if it's going to hold. Also, I'm holding Tau, and it's at 202 right now. Remember, this thing was at $500 not that long ago, $545. But anyway, I digress. Bitcoin, much longer right now. All the pieces say that, you know, this rally could continue, but I mean, it's crazy. All right, let's get back into chat now. We never had a bull market. Fiat under a penny. Yeah, by the way, I would buy Fiat right now. Matter of fact, I reached out to somebody I reached out to somebody and I said, hey, you know what? Fias is under a penny right now. You should buy. Just to try to tell somebody, hey, look, it's an opportunity. I wanted to be helpful. You know, they argued with me. And they were like, there's some wallet selling or something like that. I mean, whatever. If you don't want to be part of it, it's okay. It's not my fucking problem. You know what I mean? Now, if you look right here, by the way, this is where we are on, let's pull this up. This is where Fias is right now. Now, I said, this is what I reached out to somebody Saturday, right there. I said, hey, we're trading at 208. You might want to get in right now because I think there's going to be a significant rally, okay? So after I called that person and told them, which was at 0.08 right there, it immediately ran up 37%. Anybody who had listened to me would be up 30% at this point. And also, if you held and you didn't sell at 37%, because you never know. I mean, you know, maybe it'll go up a little bit more, maybe it won't. But if you didn't, you're still up 10%. Still up 10%. Look, it was like I was donating free money to somebody. And you know what they said? Oh, I'm worried about this wallet or some random fucking wallet. Okay, no big deal. Whatever. So, by the way, for those of you that don't know, in 2 days, I'll be interviewing Tom Anderson to talk about Fias. Now, I'm going to ask him some questions off camera about dev and see if he's willing to talk about some of the dev questions. But otherwise, we're going to be talking about Fias kind of strictly. I'm not sure if he wants to talk about it or not. So, but anyway, so that's, I mean, guys, Dev, by the way, not moving with the rest of the market. Definity, by the way, not moving with the rest of the market. Now, we had a big seller exit Definity over the last couple days. And again, I told you guys what I think the problem is. This was a big problem for me with Definity was when they made their announcement, they didn't do, the announcement didn't go over as well as it should have because nobody mentioned that DEFX was the token that everything was running with. They just said Bloomsbury money, and there's not even, it doesn't even mention Definity. It doesn't mention anything. So here's my take on that. There's still plenty of time for people to get in on this. So if you don't know what I'm talking about, Bloomsbury Money is the parent company for Definity, okay? Now, media. Midnight Foundation selects Bloomsbury Money for FX, cross-border transfers, and e-money solutions. Okay? That was January 15. Now, we've been in a shit market since then, but January 15, Midnight Foundation chooses Bloomsbury Money for their transactions. Who is Midnight Foundation? Midnight blockchain, the privacy blockchain created by Charles Hoskinson. What does that mean? $798 million market cap right here. $798 million market cap. This is a massive project. But if we don't like that massive project, what about his other massive project called Cardano, which currently has an $11 billion market cap? Do you see how much money there is right now? Do you feel how much capital there is? Well, listen, it is my opinion that it is only a matter of time before people discover Cardano people and Midnight people. And by the way, for those of you that don't realize it, those are cult-like followings, okay? Those are people, crypto bros, that are going to buy whatever Charles Hoskinson is working on because, you know, $15 billion worth of Cardano was sitting there. And now it's, I think overall it's 12 billion. So we've lost some in the market, but Midnight is $1 billion project. Midnight is $1 billion project. Cardano is an $11 billion project right now. I mean, again, after the dump that we've had, the numbers are lower. But again, at some point, all of their money, they're going to realize, oh, wait a minute. DEFX is my payment provider. And you're going to see millions of dollars come into Definity, and you're going to see this thing 100x. Now, when it 100x's, it'll only be a $250 million market cap. Actually, if it's even that, like I don't even know what the market cap is on Definity. Yeah, I don't think it's right there. Definity market cap is $1.6 million. $1.6 million. If it goes to 150 million market cap, that's a 100x. Guys, I am telling you right now, it is my belief that Definity is one of those magical gems that's going to absolutely blow up. Now, could I be wrong? Of course. But these are all the pieces that are in place right now. When this market discovers it, and it will discover it, when this market discovers it, it's going to get crazy. Now, we're at $73 billion in total market cap right now, which means it's a pretty positive number for the day. We'll see whether it maintains. We'll see what we need right now to establish confidence. Let's go back over here. We're going to go to crypto market cap. We're going to go to the weekly charts. We're going to break out some of these weekly charts right here. We're going to look at inflow right now of volume. We're going to look at the long-term volume range. Now, where we're sitting right here, you notice there is a volume node. I'm kind of zooming a little bit to give you guys a little bit more of a look right there. But if you check that out, 3.2 trillion market cap is where we should be going next. Now, let me point this out. Here's what I'm talking about. Here's where we are right now. That's where we are right now. Right there. Okay. Now, it is attracted to where people are investing. So where's the next spot? 2.96. 2.96 corresponds with this area right there. So 2.96 trillion is where we need to go. In order for that to happen, we need about $300 billion to re-enter the market. If we do that, then the next step would be to recapture 3 trillion and then move up to 3.28 trillion. Somewhere in that range. This green line that I had over here, we can now, let's just drop that one. Let's put that up right now. That's going to be the next goal right there, which happens to be right where that white line is, by the way. And then this little area right here, which we want that to be a 2 right there. All right, cool. Now we're going to drop that. I'm going to go back to it. So here's the levels that we're looking for right now. We're looking for a break back above right there at 2.94 trillion, which we're at 2.63 right now. It's $310 billion re-entering the market. It could go into any projects. Most likely, most of it goes into Bitcoin. I'm not going to, I don't want to sugarcoat that. Most of it's going to go into Bitcoin because that's the king. So 2.93 trillion. Then if we can confirm that and we can get a break above, which means that we get a break into this range a little bit higher, and then we break back down right there where we were before without doing what I think we'll probably end up doing, which is if we get a rally, it'll come up to here and then it'll fail, fail, fail. Investor confidence is shattered, and then boom. That's the potential. That's the potential right now. So there you have it. That's what's going on in the market. So I hope I explained that the right way. I hope you guys understood everything that I was saying right there. And all right, no more chat. So we're good. All right, guys, that's it. That's the show. Thank you so much for tuning in. I appreciate each and every one of you. Today, we've got content coming out on XRP. We've got content coming out. It's just a short, but it's going to be content on Chainlink. Every Monday, we're going to do XRP and Chainlink content. Every day, I'm going to start telling you what the new content is, just so you guys have an idea of what we're doing. In fact, this is what we got right here. I'll actually show it to you. Why the hell not? So on Mondays, we got our Terra Luna content Monday through Friday. Then we've got our Anchor content, which for me is the top 5 at 5. We're going to do that at 5 p.m. every day. Top 5 at 5. This is top 5 news articles that affect you. Then we've got Tap content right here, which we're going to tap into certain markets. XRP on Monday, Tau on Tuesday, Solana on Wednesday, Ethereum on Thursday, Bitcoin on Friday. Then we've got short taps. Short taps are just shorts that I'm going to put out, and I'm going to try to link them. And this may not be written in stone, but we're going to try to kind of make a synergy right there. And then we got our lives, which is back at 9 o'clock. Anyway, back to short taps. Today is Chainlink. Tomorrow is going to be ICP. Next day is going to be Cardano. Next day is going to be Ondo. Then the next day is going to be Sweet. Now, I don't know if that's going to change, by the way, over time. If I don't get any traction in one of those markets, I'm going to pivot away from it and we won't cover it. If I get traction from those markets, then we'll continue to do it. So that's going to be the idea. Saturday and Sunday will be for making some of this content to getting it ready and stuff like that. We're gonna have some weekend content, but to be honest with you right now, my weekend content is the Chicago Bears, because the Chicago Bears has been doing very, very well. Just so you guys know, if you go look at, I'm gonna show you this. This is my TikTok. 128,000 views, 65,000 views, 84,000 views, 15,000 views, 12,000 views. There's 14.4 thousand views. I'm getting a lot of content. I'm getting a lot of traction off of the Chicago Bears. Instagram, same thing. If you go look at my Instagram right now, it's the same. You can't see it here, but this one's got 4,000 likes. This one's got 6,000 likes. This one's got 535 likes. So, I'm getting way more engagement, way more content right now, covering the Chicago Bears. By the way, for those of you that don't know, I guess none of you would really know, but I am going to pivot from Chicago Bears to, by the way, I've renamed everything. I guess I should show you this too. If you are interested in the Chicago Bears, this will be good for you. Instead of Bear Down or anything like that, it's now called Believes in Chicago. So it's Believes in Chicago. So what's going to end up happening, and you can see right here, my popular videos, 34,000 views, 24,000 views, 20,000 views, 18,000 views. This pays me hundreds of dollars. Each one of these videos is paying me ridiculous amounts of money compared to what's going on in crypto right now. So, but anyway, we're going to pivot to Chicago Bulls, Chicago Blackhawks, Chicago Cubs, Chicago White Sox. We're just going to cover all Chicago news. I'm just going to cover all Chicago news. So if you're interested in Chicago sports in any way, then by all means, certainly come and check me out, because that is what we are talking about all the time. And also, if you want to help me, one of the most important things that you can do for me right now is I just launched my own fitness channel. 13 months ago, this was my 360-pound bacon cheeseburger with French fry eating pizza, different movements and stuff like that, so that you guys can see them. Buddy. That's the early part of it, but as we go, I'm gonna create more content for fitness. Guys, I've changed my life with fitness. So I'm much healthier than I've been in years, much more active than I've been in years. So if you want to follow me on that journey, Believes in Fitness. That's it. So that's the show. Thank you so much for tuning in, guys. I appreciate you. And that's it. It's not financial advice. I'm always right. I appreciate you guys, and we'll talk to you.